All right, brand new week, Monday, the 28th of March. We're looking at the daily currency call now. This is recorded for the Traders Club members and also will be uploaded onto YouTube shortly later today. So what we'll go through today being Monday, we're looking at the Aussie dollar, the Kiwi dollar. We've just seen quite a big move in the US dollar moving, getting stronger across the board. So what we could be looking out for through the week, in particular for the Aussie and the Kiwi dollar. With all that, first off, what we have to do is look at the disclaimer. Any information shared in this video is not intended to be a trade recommendation. It is solely the opinion and views of the speaker. So please remember to do your own analysis prior to entering any trades. With all that said, let's look at the news here on Forex Factory. What's going to happen? What could happen? We've just seen the US dollar strengthening across the board. Not a lot of news that has applied for today, right? Throughout the week, in particular for the Aussie and the Kiwi dollar. Tomorrow, Tuesday, we do have the Aussie retail sales number month on month looking to go from a 1.8 to a 0.8%. So possibly a small drop in the Aussie dollar there. I'll tell you a bit. Aussie dollar is in a very interesting position now, so I'll tell you a bit more about that shortly. Tuesday, we do have the JOLTS job openings for the US, looking to stay quite strong at the 11 million mark. Previously was 11.26 mil. With that, this week being the end of the month and also into the new month of April, on Wednesday, we do have the US ADP non-farm employment change numbers expected to go from a 475K to a 455K. So not a big change expected there. ADP non-farm is a private number of the non-farm employment number data there. So giving a slight indication of what we could expect for the non-farm numbers on Friday. With that, we do have some pound current account numbers, GDP numbers, but I'll tell you more about the pound dollar and the pound data on Wednesday morning when we go through the pound dollar. And then we have CAD. We spoke to you about CAD on Friday already, the GDP numbers to be released, looking like a small increase from a 0% to a 0.2%, a small increase in the CAD. I'll do a quick review of the CAD dollar as well, dollar CAD as well. And then on Friday, the main event, US non-farm employment change numbers looking to go from a 678K to a 485K. So a slight drop in employment change numbers, but still an increase, right? We didn't expect it to be in that 600 number because you can't expect employment change numbers to consistently be so high. We are reaching a very stable number for employment for the US. We're looking at unemployment rate going from a 3.8 to a 3.7, a slight improvement in unemployment, and average hourly earnings increasing from a 0 to a 0.4%, also indicating slight inflation there in terms of hourly earnings increasing for the US. So with all that said, what could happen or what's likely to happen? Before we do that, we have seen the Bank of Japan offer to purchase an unlimited amount of 10-year bonds at 0.25%, which also led to the US dollar, the US yen jumping that whole 88 pips over the last couple of hours. With all that, look at the dollar index here. The last time we spoke about dollar index, we were saying that as it reacts to this 98.45 level, looking for it to bounce up first towards that 98.50 and then towards that 99 level. It's done that. Right now, it is sitting at that 99 level. What I'm anticipating, I'll move this in so it doesn't confuse us a little bit. What I'm anticipating here is for it to sit at this 99 level before possibly testing higher towards that 99.50 resistance level. So just to show you an arrow again, looking for it to sit across before testing higher towards 99.50. I think that we could see that further dollar strength come back into play. Okay, I'll adjust this a little bit. I think it will sit across or possibly test a little bit lower before testing back to that 99.50, that recent high point. But I don't think it will break above 99.50. If I zoomed out, you can see that 99.50 is a very high point. Even if we went to the daily time frame, haven't been above 99.50. In the weekly, the last time we broke above 99.50 was back in March 2020. It broke significantly above. That's because of the pandemic. March 2020, we saw the dollar strengthen significantly as funds move towards reserve. So what we're looking at here, back to the H4 time frame, is for dollar to strengthen towards that 99.50 level and possibly consolidate at that point. But with dollar strengthening towards that 99.50 level, it does give us a lot of trading opportunities. What we could see here is, hang on, move that away. What we could see here is the Aussie dollar. Look at the Aussie dollar. It is approaching that 75.40 resistance. We've spoken about this quite a bit. As the Aussie dollar, the last time we spoke about it, bouncing off that 74.10 support level towards that 74.65, it's broken that and it's approaching and consolidating at this 75.40 level. What I'm looking for here will be for it to consolidate, possibly look to break slightly higher but turn back down. All right, so I'll show you an arrow again. I think that we might see the Aussie dollar test higher, but I'm looking to sell down the Aussie dollar from this 75.40, looking for further downside, looking for that dollar strength to come back into play. So about could be a little bit more conservative here. So about 75.20, below 75.25. So for it to test higher and turn down below 75.25, about a 40 pip stop loss. Your first take profit could be about 40 to 50 pips, so a 1-to-1 risk reward ratio towards the downside. Or ultimately, you could be looking for it to come down towards that 74 round number. So a 1:2.5 risk reward towards the downside. 40 pips stop loss, 100 pips take profit level. Looking for that counter trend, looking for that rejection of that 75.40 level. Bear in mind, looking for that counter trend, looking for that rejection. So we need to see it go up, test and reject, turn back down below 75.25, then look to sell. So look for it to go up, turn down below that point, then look to sell down towards 74.65 and ultimately towards 74.00. So that's quite straightforward for the Aussie dollar, looking for that counter trend trade. At this point, we're seeing it consolidating near that resistance level. The Kiwi dollar looks like it might be happening a little bit earlier than the Aussie dollar. We see the Kiwi dollar already testing higher. The last time we spoke about it, we said that it was going to go higher. It moved halfway towards the take profit level, but now we're still looking for that rejection or that retracement back down from that 6930 support level. So we're looking for it to test lower. Again, I'll drag that across. Actually, I'll move this lower. Right, we're looking for it to break below 6922, below that support level, towards the next support of 6842. So we're looking at a selling opportunity below 6925, about you can have a 30 pip stop loss there for a 70 pip take profit level, a 1:2.3 risk reward ratio towards the downside. In this case, similar to the Aussie dollar, we might see some bounce back up. We might see some consolidation, but I think the Kiwi dollar is more likely to move lower first compared to the Aussie dollar. Again, looking for that selling opportunity towards the downside for the Kiwi dollar. And then with that, doing a quick review of the USCAD. USCAD, last we spoke about it on Friday morning. We said that at this 1.2528 level, we're looking for it to break lower, a short-term trade towards that 1.25 level. It's dropped, it's come towards that 1.2467 level, almost towards take profit. Right now, bounced back up, tested that 1.25 level again. I'm looking for further downside. If you didn't manage to jump into that trade, you can actually be looking to sell it down if it does close lower from this resistance level. You can still look to sell it down. I'll move this a little bit towards that point. You can look to sell down from about 1.2474, below 1.2475. Again, about a 40 pip stop loss. I wouldn't go all the way down. I would say a 1:2 risk reward ratio towards the downside, towards that 1.2393 support level or interim support level. We can look at a 1:2 risk reward ratio towards the downside for the USCAD. So with that said, quite a few trade opportunities on the Aussie dollar counter trend trade, the Kiwi dollar counter trend as well. We are seeing the dollar index moving, possibly consolidating and moving higher again. That's why we're seeing quite a few counter trend trade ideas at this point. I think that we're going to see quite a few trade ideas for the euro dollar and the pound dollar as well, which we'll go through in more detail tomorrow for the euro and then on Wednesday for the pound dollar. With all that said, trade safe, trade well, take care, see you tomorrow. Bye-bye.